Hey, Andrew here from The Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 62. And this week, we're going to talk about some good news, and particularly some good news on the interest rate front. So before we dive in, I'll try and encourage everybody to hit the subscribe button and the little bell if you're watching on YouTube, and if you're watching on Facebook and LinkedIn, do me a favor, leave a like, a comment, and even share these videos so that more people get to hear what's going on in the world of financial literacy and our investment insights, which we share here on the weekly wisdom videos. So let's have a look at this week's headline: interest rate cuts just getting started. Now, if that seems like an unusual headline for you to suggest that they're just getting started when we haven't even seen one yet, that is pretty interesting, isn't it? That they're already talking about them just getting started, but we haven't even seen one yet. But we saw some interesting things happen in the past week in the financial markets. So obviously the Australian market didn't increase rates, which was something that was threatened in the last week or two as a result of certain pieces of data not moving in the direction that our Reserve Bank wanted to go. In particular, inflation had risen in the last month, and so there was some general chit chat about potentially interest rates going up, but thankfully the Reserve Bank of Australia did not increase rates, and now we're starting to see headlines like potentially the next move is down. And fueling that, as we scroll down a little bit, fueling that that expectation or theory is the fact that there's been some softer data coming out of the US. So in particular, this article talks about some of their retail spending being softer and their wages growth being softer and all those types of numbers that all feed into the interest rate equation. We're hearing now that the numbers are not heading as rapidly upwards as they once were. So fears of recession, and that's what sparked the massive sell-off in stock markets this week. If you listen to the media, I think there's a whole different reason for that, and you have to go and watch my Facebook live video from this week to get my perspective on why that's all happened. But fears of a recession, whether it was in the US or Japan, was the reason given for stock markets falling so dramatically. Let's get me out of there. And so that led to a sell-off in the stock markets. But here we are talking about the FOMC in the US meeting in September with a rising expectation that they might cut rates. And so whilst we don't react necessarily to what they do in the US, it's highly likely that if they drop rates, then we will follow suit at some point. And this article talks about the Reserve Bank meeting a week later here in Australia, but the writer in this article is suggesting that it may not be until November when Australia drops their rates. So according to research, the analysts are now sitting at greater than 50% that November will see a 24 basis point or a 0.25% drop in the Australian cash rate. And it'll be interesting to see how much of that the banks then pass on. But if it does come in November, certainly will be none too soon for everybody, particularly with the rising cost of living and with our wages still being almost a decade behind. It's going to be a welcome piece of relief to get that interest rate cut and hopefully passed on. So as I said, 50% expectation that rates will decrease in November, although there is a meeting in September. For those people who are familiar with the interest rate cycle, the first meeting of the Reserve Bank in November happens very much around the same time as the Melbourne Cup, the race that stops our nation. So it'd be interesting to see if we have a Melbourne Cup, a bit of cheer for everyone at the Melbourne Cup, and then we get an interest rate drop in that time as well. I think it's highly unlikely we'll see it in September, particularly given the last month where we saw we saw inflation go up, which caused a little bit of concern for the Reserve Bank. So I think they're going to wait and just see the September numbers, and then more than likely, if all things keep going the way they are, that we'll see that interest rate cut come before the end of the year, and more likely November. So as I said, things in the US, it's been a very powerful economy, but in recent times there's seen a slowdown in housing activity, unemployment going up a little bit, and a growth in consumer spending has softened. So they're the three factors. Interesting that they're saying unemployment is rising when the job numbers have been off the charts in terms of jobs created. So it will be interesting to keep our eye on what does keep happening and what data keeps coming out of the US, and then obviously in particular what's coming out of Australia. Our inflation, like we've said on these weekly wisdom videos, has been a little bit stubborn and hasn't wanted to fall at the rates that everybody else would have liked. And maybe that, in a really high level view, that stubbornness of inflation and the high interest rates that have come about may not in the end be the worst thing, because it might cushion us from reacting or overreacting too far one way or the other. So we'll see how that all plays out over coming months. But as I said, as we go through this article, the main thing that comes from here is that they do expect that our economic growth will be less than expected, and that global economic growth to be at 2.6% in 2024, followed by an acceleration of 2.8% in 2025. So if we start to see the global economy growing, that's a good sign for everybody, and that could certainly result in a reduction in interest rates. And then look, we try very, very hard in these weekly wisdom videos and any of my videos to stay away from the political scenario. But it's important here to just highlight this sentence in particular, that is basically saying that the world is looking to see what might happen in the US elections later this year, given there is a fear that global trade tensions could be under pressure and could lead to rises in prices if a certain candidate wins that election in the US. So it's important to keep an eye on everything that's going on, but at the same time be very mindful that what we read and hear in the media, it is not always telling the full story. When it comes to the numbers and the headlines being a disconnect, it's how these videos actually came about, was because of that disconnect between the headlines and the actual what the data was really telling us. So what I want you to take from this video is that there is some good news on the horizon. And if interest rates do start to fall, it might not be just the one fall. I think we might see 2 or 3 in 2025. And that will bring rates back to a level that is still below probably the long-term average, but a number I think that will enable people to have a little bit more breathing room when it comes to their home income and expenditure and the balance of that, and therefore the ability to put a little bit more into investing or reducing your debt and just getting on top of your financial circumstances. And if you want to have a chat about your financial circumstances, you can always reach out and have an obligation-free and free chat with us to see if there's things that we might be able to do to help you. So feel free to do that. The links are in the YouTube video. The links are there. And if you're watching on social media, just send us a DM and we will get you the link so that you can organise a time to have a chat. So that's this week's Weekly Wisdom, episode number 62. Inching our way towards our first 100 of these episodes. And like I said before, if you are watching on YouTube, make sure you hit the subscribe button and the little bell. And if you're watching on Facebook or LinkedIn, leave us a comment, hit the like and share buttons, and let's spread this financial literacy education to others so that everyone gets the benefit. And I'll see you again next week for another Woody's Weekly Wisdom. Cheers.